morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we commence a mini-series which really is aimed at helping the individual investor make better investment decisions or more focused investment decisions in terms of constructing their portfolio. And in this first installment, we are presenting the conservative investor profile, one of three broad investor profiles which investors can be categorized into, and that, of course, would provide a lot more guidance as to what are the more appropriate investment solutions that should be a part of their portfolio. So let's get straight into it, the conservative investor. And of course, we're going to take a look firstly at some of the investment characteristics. What type of investor are you? And as mentioned, there are three broad categories: conservative, moderate, and aggressive. Today, we're focusing on that conservative investor categorization. And in terms of risk, well, the conservative investor, as the name would suggest, does have a generally lower risk tolerance, offering, or rather preferring to trade off higher returns in exchange for an increased level of certainty and protection. And that flows into the return requirements of a conservative investor, where there is a prioritization of income generation and capital preservation. So basically, not taking too many risks, being able to sleep a little bit better at night. And of course, the main objective is to preserve wealth, which means really beating that inflationary rate. And preserving that real purchasing power over time. So with that in mind, the time horizon for the conservative type investor is generally on the shorter end of things, typically 1 to 3 years, with some portions of their portfolio extended into maybe the 5 to 7 year horizon when they consider different types of assets which will be included in that portfolio. And the liquidity needs of the conservative investor is typically higher. The conservative investor does like to have reasonably quick access to their investment funds with a little or no loss to their principal, or preferably no loss to their principal, in the event that they do need to access those funds quite readily. Now, with those characteristics in mind, is there a particular age or demographic, age and stage in life in which the conservative investor falls? Well, conventional theory based on the so-called investor life cycle would suggest yes, and that the conservative investor typically falls within according to this investor life cycle, the retirement stage, and we use that term loosely, which is anywhere from the age of 60 to 80. Now, that is just a very generic categorization in terms of the age and stage of the investor life cycle for the conservative investor, where, again, there is a preference for certainty and safety as opposed to taking too many risks in terms of their investment solutions. Now, with that being said, the conservative investor is really about a mindset and a particular risk tolerance. So while generally the conservative investor falls into that retirement stage, for example, a young entrepreneur who takes most of their risk through their business operations, but perhaps with that cash flow coming from the business, would not like to take so many risks and would basically take that and his investments outside of the business and put it into lower risk type solutions, which would be pretty similar to the conservative investor type profile. Now, with that in mind, what are some of the conservative investment options available in constructing a portfolio? Well, of course, there are income mutual funds, which are probably the most liquid and lowest risk solutions available on the market. And of course, some of those income mutual funds, particularly those fixed NAV mutual funds, do offer rates of return in the vicinity of 1.3 to 2% at the current market rates. Repurchase agreement and fixed deposits, which as the name suggests, would be for a fixed term with a fixed rate of return, are another lower risk solution. And of course, these are offered by broker dealers such as Bourse, as well as commercial banks and merchant banks in Trinidad and Tobago. And these rates of return can range from for larger balance investors around 3% and up at based on current market rates. Now, in terms of other investment solutions, of course, there are investment-grade bonds. And when we think investment-grade bonds in the Trinidad and Tobago context, we think about the government of the Republic of Trinidad and Tobago. Again, for the conservative investor, they don't necessarily want to be investing too far out into the future because that increases the level of uncertainty. So probably maximum in the 5 to 7 year tenor, perhaps shorter if they can get it. And dividend stocks traditionally have also been a part of the conservative investors' portfolio menu options in recent history, at least in the Trinidad and Tobago context. Having said that, the lack of performance of the Trinidad and Tobago stock exchange, as was highlighted by the composite index, would suggest that there is a bit more increased volatility in terms of holding stocks for dividends as part of a conservative investor portfolio. Now, when we think about the average dividend yield across sectors with regards to dividend yielding stocks as part of the conservative investor portfolio, we see that banking sector stocks on average offer dividend yields currently of about 4.2%, conglomerates about 3.3%, the same for manufacturing 1 and 2 sectors, trading 3.5%, and a non-banking finance sector a dividend yield of 5.5%. Now, take this information with a grain of salt again, because there's been a lot of price volatility, particularly over the past 2.5 odd years in terms of stock markets, and in particular, that market the stock market has been on a bit of a decline over the past 2.5 years, as Bourse would have reported in some of its earlier presentations. Now, keeping that in mind, what should a conservative portfolio allocation look like? Meaning, what percentage of your portfolio are you going to put into different types of investments? Well, we've constructed a sample portfolio, and 10% roughly in our sample portfolio would be in income funds, with 35% in repos or fixed deposits, and another 35% in those investment-grade bonds or Government of the Republic of Trinidad and Tobago bonds or NIF bonds, particularly the shorter-term bonds, with a 20% allocation to those dividend stocks to perhaps add a bit of use in terms of your overall return. And what would that return look like for that particular sample portfolio? Well, a portfolio, if constructed and based on current market rates, for the conservative investor would yield just about 3.7% annually. Now, again, while this doesn't seem like a lot, for the low risk tolerance investor who is opting for a little bit more safety in return for less volatility in their portfolio, 3.7% isn't too bad of a return. How does that compare to beating inflation and preserving your purchasing power? Well, the average 5-year Trinidad and Tobago inflation rate would have been just about 2.8% again on a trailing 5-year basis. So looking at that conservative investor portfolio based on market rates right now, as well as the historical inflation rate, the conservative investment portfolio does get things done in terms of preserving that purchasing power in a very low-risk manner. So is conservative investing for you? Are you a conservative investor, or are you perhaps a little bit more risk tolerant and willing to take a little bit more risk to generate more returns over time? Well, that's a question for you to answer. And of course, you can consult with any of your preferred investment advisors, including me, Bourse, to help make that more informed investment decision. Next week, we're going to take a look at the moderate investor. But for now, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com. And of course, you can check out all of our research, including this article, for free on our website, bourseinvestment.com. And of course, in today's business section of the Guardian newspaper. So until next time, good luck to all Olympians. Stay safe, happy investing, and we'll see you again on the Bourse Report.